On today's hot sheet, I will be discussing an increase in seller concessions in Zillow's latest housing market report. By the way, where are you tuning in from? Drop that comment below. Today is Wednesday, November 15th. I'm your guest host, Jeremy Knight, your favorite Austin realtor, and the hot sheet starts now. I am super excited to guest host again. Thank you for Byron for letting me come back. All the support on the back end. Bobby, you're amazing. We're going to get through a lot of this. Rebecca, hello. William, hello. Bob, hello. Robert, hello. Christian, Daly, hello. Man, good to see you all. So we got a lot to go through today. And halfway through this, I'm going to give you a really good Instagram tip from some of this data. If you're not using the data on here, I highly recommend it. BAM is definitely providing a lot of really good stuff. So welcome to the Hot Sheet, the industry's only daily live news show on the internet, brought to you exclusively by my good friends at BAM. The Hot Sheet covers what you must need to know about the real estate industry in a 24-hour time period. Again, I get the opportunity to guest host here, but the reality is every single day I watch the Hot Sheet personally, and I take bits and pieces of the data away from here, and I share it with my sellers, my buyers, everybody. If you're not doing that, you're missing out, especially if you're not using the hot sheet code Jeremy to get a discount, which we're going to talk about in a second. So a lot of really cool stuff that happens on here. So definitely follow that. Janet, what up? Crystal, good to see you. For access to the charts and the slides that we'll be reviewing today and every day, sign up for BAM X. I personally have a membership. I think you should get one as well. This is where you get access to all the Hot Sheet daily downloads, courses, bi-weekly masterminds, the BAMX community. Use the promo code Jeremy. It's the best promo code out there. The best. It is the best promo code out there. 10% off on your prescription and the link in the description. Prices for BAMX are going up December 1st. Yeah, they're going up. Bobby, the producer on here, just told me they're going to be $1,000 a month now. Okay, they're not going to be that high, but you get a really good discount buying it now. You're going to be grandfathered in the future. So sign up now to be grandfathered in today's prices for life. If you have a BAM membership already or BAMX membership, drop a 1 in the comment section. I want to hear from you, and I want to give you a little shout out because, again, I usually take this information and immediately make an Instagram post after every day. If you're not doing that and giving it to your client database, all that fun stuff, yeah, here we go. So I want to go into the Redfin data that just came out. William says 1. William, you get a happy face from me. Trisha, good to see you. Thank you. So seller concessions. So in the Austin market, I looked this up. It is 43% of the home sales that happen in the Austin market are seller concessions. So this Redfin data out right now says sellers provide concessions to buyers at 35% of U.S. home sales during the 3 months ending October 31st. If you're seeing a lot of seller concessions in your market, I want to hear from you in the comment section as well. What concessions are your sellers giving up? What concessions are your buyers getting? And I want you to also write, are you posting about this and making information about this? So which is a little changed. So this 35% is little changed from the previous year, but up from 2 years ago. If we look at this chart right here, I would be hammering this home to my clients. Look, at the end of last year, there was a lot of concessions towards the end of last year. Now we are still at 35%, which is much higher than the pandemic. Yes, we're at 7.4% interest rate right now. It came down a little bit. We'll look at the 10-year at the end of this. But look, if you look at the middle of last year, very little concessions, a lot more concessions. So I would be telling my buyer clients, hey, look, right now is the opportunity to get a little more concessions. What that means is this: we're going to get buy down rates. We're going to go through all the process, get through the lenders, and give this information out to my people as much as I can. But 35% is a huge amount. So how do they define concessions? Concessions include money towards repairs, closing costs, and other mortgage rate buy downs, but do not involve situations where the seller lowered the list price due to negotiations. I think, Bobby, there's a slide for that shows the different amounts. I think it was like 35%, 14% actually gave concessions. So the increase in concessions marks a reversal from the pandemic home buying frenzy, which with sellers now offering freebies and attractive to attract buyers, especially as mortgage rates hit the highest level in 23 year since October. So in the OKC market, Jody, what are you offering or what are you seeing? I know the builders, we're going to talk about builders in a second, Jody, as well. Because there's we got a slide here showing the builder confidence level, and this is something we'll briefly bring up here. So, what other concessions are you seeing besides new homes? Like, when you're listing a property, are you offering a buy down rate? Are in your market? Look, there's a lot of markets that have a lot of inventory, like the Austin market. But in your market, are you offering a lot of incentives? And guess what? In a second, we're going to go through. I want you to write what market you're in real quick, because in a second, we're actually going to go through and look at individual markets to see what they look like compared to this national average of 35%. So the increase in concessions marked a reversal. I said that. Okay. Reasons for concessions. Sellers are more open to concessions due to major life events such as divorce, new jobs, with a desire to sell homes quickly. Additionally, contingent offers are more feasible. This is one thing that the Austin market didn't see over the last 3 years was contingent offers. Now we're getting a lot more of those contingent offers accepted. I know we are with our team. Contingent offers are more feasible, allowing buyers important safeguards like inspections. So is this something you're talking about with your clients as well? I think this is something I would definitely talk about, make a reel about or a short about, or send out to my database. What's interesting about this seller thing, so I just made a video on my YouTube channel literally last week about sellers and the market and concessions. So I'm already ahead of the curve. In fact, I have a video on my YouTube channel today going out about new builds, the incentives with new builds. So if you're not making YouTube content, I really recommend you do. I'm in Dallas at the moment. I actually taught a class yesterday. I'm going to be in front of a bunch of agents today talking about YouTube as well. So definitely should be doing YouTube. But one of the sellers got really offended by my video talking about concessions, how much concessions are actually happening. And this seller got super offended and was like, if buyers can't afford, then they shouldn't be buying a home. And I said, well, if the house needs a new roof and can't make appraisal because of a new roof, who's going to pay for that? You or the buyer. And so these are things. So a lot of these sellers in this market, why you see some home sitting, especially in Austin, their sellers aren't as realistic. And that's the whole point of that video. So home price agreement and cancellations. Are you seeing a lot of cancellations in your market? Because I know in the Austin market, I didn't see Byron the full video the other day, but the average right now is around 16%. So I was curious how that marks the Austin area, if that is close to the cancellations in your market. Around 16.3% of U.S. home purchase agreements were canceled in September, the highest percentage since October 2022. I remember last year we had 9 cancellations at the end of the year, and if half of them had kept their deal and just renegotiated the price back then, they would have like literally a 6.3% interest rate. They'd have a price still kind of under where the market is, and they bailed. So did you have that situation? I know we had it in the Austin area. The highest percentage since October 2022, possibly reflecting an increased likelihood of buyers terminating deals if they don't receive desired concessions. Now, I saw that with interest rates coming down over the last couple of weeks, that more buyers were going out and getting pre-approvals. So that means that, every time the interest rates drop, these buyers are getting back out there. I mean, are you seeing that in your market? The impact of home builders. Bobby, will you pull up the it's on the side notes there. It is the builder confidence. The share of sellers offering concessions has risen partly because home builders offering deals to offload inventory constitute a growing portion of the market, accounting for 30.6% of U.S. single-family homes for sale in the third quarter, the highest share on record. Back in the comments there a minute ago, Jody was talking about builders. Builders are offering a lot in the Austin area as well. But it's interesting to me that at the beginning of the year, I went to an event with Highland Homes, and they were ecstatic. Obviously, Highland Homes was going to be pretty happy about that. But it was interesting to me that the builder confidence back then was at 35. It peaked at 50, now back down to 40. I think builders are getting a little weary. What are you seeing in your markets? So the geographic, is that what you pulled up right there? Perfect. Thank you. So I can only see half my screen. I'm on my laptop today. So like I said, I'm in Dallas. Concessions are most common in Salt Lake City, 63.3%, San Diego, 60.9%, Denver, 56%, Las Vegas, 54%, Raleigh, 54.1%. In contrast, concessions are least common in Boston. Who's from Boston? Boston, if you're in the house, drop a comment below. San Jose, if you're in the house, 14.4%, drop a comment. New York, where are my New York friends at? And Chicago, 19%. I mean, let's look at some of these right here. So here's the list. I can't really see that, Bobby, so I'm going to pull up mine. So Atlanta, Georgia, 49.5, well over that median price, right? Austin, Texas, 43.2%. Boston, way down there. Charlotte, where are you guys coming in from? North Texas. Are you aware of lenders putting hold on HELOCs? Was just told this in case for Wells in. I've never seen that. Give me a little more information, Don. I'm curious. Dallas, 49.3%. Interesting that Dallas is offering more concessions. I was here yesterday talking with agents in Dallas, and it seems like the market's been pretty moving along. I made the joke that everybody thinks Austin is more expensive than Dallas, but it's actually converse. And they all kind of laughed. They're like, yeah, it is more expensive here. Denver, Colorado, 56%. So if you're trying to move homes in Colorado, you better be explaining to your sellers like, hey, we are going to have to potentially offer incentives. And what do those incentives look like? Houston, 47, even higher than Austin. Interesting. Las Vegas, 49, or Los Angeles, 49%. Are you seeing that? Come on, San Jose. Hello. You're looking good in San Jose. I would be putting the fact that for my seller clients, only 14% are giving concessions in whatever fashion, Nationals 35%, New York 14, Orlando's 34. Pretty interesting there. All right, let's keep moving with the show. So if you're in one of those markets, drop a comment below. I want to hear from you. What are you seeing as far as concessions goes? But year-over-year changes. Salt Lake City saw the biggest year-over-year jump in seller concessions, up 25%. That's crazy. While Chicago experienced the most significant decline, 21%. Over the notable changes include Tampa Bay, 23%, Charlotte, 11%, and Phoenix, 7.8%. What was interesting as I read through this article, one thing that kind of stuck out to me is that the reason why prices haven't really dropped, and this is something that we've talked about, has really been that fact that home owners are been locked in at that 2 to 3%. But if you think about it, in 2008, when the market crashed, we didn't really have anything. We had a lot of people with 5-6% adjustable rate mortgages. Now, when all of these people are talking about this is going to be a 2008 crash, well, the reality is those 2 to 3% interest rates are really preventing. So a lot of people got those. And then what is it? 35% of people are in cash, own cash, or 40%, whatever it was. So when people tell me like, oh, this is going to be 2008, or you're hearing a reventure go out there and talk about how it's 2008, I would point out 2 to 3% interest rates are really preventing people from selling, which is really preventing prices from going down. But interesting enough, in the Zillow article we're going to talk about, there is some headway coming here. So what I would do if I were you, I would take the information from right here, and I just posted on Instagram myself, so you can see the proof of concept. So what I did is I created a quick little video. It said, hey, nationally, 35% of home sellers are giving a concession to buyers to close a deal. Conversely, in Austin, it's 43%. Read the caption below. And in the caption, I wrote what buyers and sellers should be doing and how they can reach out to me. That'd be a great reel, a great short for you to put out right now based on the information you just got here. So if you found value in that, definitely write a 1 in the comment section. If you're going to do that, write me, I'm doing that in the comment section. I want to hear from you. Okay, let's talk about Zillow, because Zillow is definitely putting out some good information on this housing market report. It's funny, the Austin housing numbers just came out, and it's in contrast to what they said. So kind of interesting that their numbers aren't right, but who likes Zillow anyway? Talking about Zillow, Bobby, thank you for bringing up, and Sarah bringing up a Zillow article. I had a gag reflex when I read that was what we were talking about today. But mortgage rates and the impact on demand. So this is what I found really interesting. Despite mortgage rates reaching 23-year highs in October, the impact on housing demand was not as significant as expected. Let's rewind back to like January, February, when Zillow was saying we're going to be up 7% at the end of the year, when everybody was saying, Redfin, Zillow, everybody was saying 5 to 7% up at the end of the year. And now we're looking at these numbers that are not even close. Mortgage monthly payments for a mortgage rate increase just below 8% led to a 4% increase in monthly mortgage payments from September to October. Monthly payments are now nearly 10% higher than previous October and have almost doubled in 2 years. So our consumers are looking at this going, damn, my interest rates going up means this. But again, this is our opportunity to say, hey, look, and there's a really good stat I'm going to give you here in a minute that it's going to really help with this, why you should be having this conversation with your buyer clients right now for the beginning of January, right? What was it? Sharon and Tamir with Real the other day said that the next 6 months are going to be the hardest. So these are the next 6 months where you really need to educate buyers and sellers. So number one, you have interest rates coming down slightly. That's helping. Sellers are giving a lot of concessions. And I'm going to give you the third one here in a second. So these are two things that I would be really hounding my buyer clients. So if you're not already, so I use Chime or Lofty is our CRM. I take every month and I take a video on the market. So basically market stats come out and I email it every month with, here's what's happening in the market. Hey, if you need to buy or sell a home, here's this, here's what's happening with us. I would be putting this in your monthly newsletter. In fact, bi-weekly. So I would be creating this bi-weekly in your monthly newsletter. But home value growth decelerated, Bobby, I think you have charts for this. Home value growth decelerated in October with a monthly appreciation rate slowing from 0.01 decline in September to 0.3% decrease in October. However, the yearly basis, the Zillow home value index is up 2.3%. So what this is telling us is that even though these rates have really crushed the housing market, had these rates not gone up this much, which we all know, we would probably see an 8-9% year over year increase. Maybe not that crazy, but probably in the Austin area. But we are still up 2.3%. So for all those buyers and sellers at the beginning of the year, so this year is going to be terrible, we're still seeing a positive growth here. Let me see what this chart shows. Yeah, I mean, this chart right here is a great, thank you, Bobby, for putting this up. It's showing us still that even from 2014 to now, look at the growth. And then look at what is that, 2004 to now. And this is one thing that I think there's going to be a chart. In fact, Bobby, if you can just click to the next chart, I'll reference the next chart here. But what I found interesting is that I had a lot of clients back in 2019 that said, oh, I don't want to sell. I don't want to sell. I don't want to buy. The market's terrible right now. And is 2023 going to be the same as 2019? Because I had it was crazy to me. I had a buyer that got lots of concessions. If we looked at that sheet about the concessions, I had a buyer that bought late 2019. And then early 2020, he told me, I need to sell my house because a friend told me the market's going to crash. And I said, no way am I going to help you just sell your house after you just bought it. It's a really bad move. The market's not crashing. Relax. He lost so much money because he sold that house when he did. Because he hired another realtor. They sold it in March when the market was crazy. Had they waited, just like I told them, yeah, pretty interesting stuff there. But Bobby, you hit the next chart for me. So new listing and inventory. So this is where things are going to start getting interesting for us, right? We've been talking about inventory has been so low, right? Prices have gone up because inventory is so low. This is the third piece to what I would be telling my clients, especially my buyer clients right now. New listings and inventory. New listings are increasing compared to pre-pandemic norms. I know Byron has been talking about the increase in inventory, which is slight inventory, which he talked about on Monday. With a deficit of 19% compared to pre-pandemic period, a significant improvement from the 35% in April. Total inventory declined 2.6% nationally, despite fewer homes on the market. So what's interesting about this is this 35% deficit is shrinking to 19%. So at the beginning of the year, a lot of home sellers and buyers are just going to get used to 7.5%. I know we have a lot of clients who don't even care about the interest rate right now. So we're going to see more inventory at the beginning of the year. We're going to see seller concessions giving a potentially lower interest rates. So what does that mean for your buyers? Would you be saying, hey, look, these three factors might be a reason why you want to buy in 2024? It's a video I'm absolutely going to make next week. So look out for that on my YouTube channel. What is that? So yeah, so here's a prime example with this chart here. I got to click because I can't see that chart as well as what you have there. So yeah, so this is what's pretty interesting. So the inventory level, if we keep on this upward trajectory, we're going to cross over that 2020 line. We're going to cross over that 2022 line, and we're going to cross over that 2021 line. So this is where inventory is going to start getting higher. I know the inventory in Austin right now is 3.9 months, but nationally we do need more inventory because if you look at 2019, we're still well below 2019 on that inventory. Hi, Tori from Cleveland. Good to see you. Jody, good to see you still in the comment section. What do y'all think so far about this? I want to hear from you because I think what's really important about, I think a lot of people get a lot of good value out of these videos. Also, the comment section is where I think a lot of really good interaction happens with agents. So keep going there. So home values in October let's see, listing inventory. Okay, home values in October in most large markets, with Austin being negative 1.5%, Minneapolis negative 1%, and New Orleans negative 1% experienced the largest drops. However, home values continued to rise in 34 out of the 50 largest markets on an annual basis. Sales activity also increased the fastest in Minneapolis, 9.4%, Atlanta, 5.8%. If you're in one of these markets, I would be talking about this. New York City Metro went 5.3% positive. Conversely, sales slowed in New Orleans, down 14%, Seattle, 12.1%, and Sacramento, 11%. So what are you seeing as far as price drops, or not price drops, but sales activity? Austin also dropped pretty considerably, but home values, look, they're not necessarily going down. So this is something that I'd be telling my clients every day. Competition for list price. As a home shopping season fades and competition cools, fewer homes are sold above list price. Bobby, there's a chart for this. Can you pull that up? The shares for home sold above list price fell 34% and 25.2% for sellers cutting their price in October, up from 23.9% in September. This is pretty interesting because, not too long ago, we saw everything going over list price, everything going list, especially in Austin, everything going over list price. But it fell from 34% to 35%. So this is a conversation you should be having with your clients as well. Like, hey, look, the amount of multiple offers are going over list price is falling nationally, which means that we should be jumping on some of this stuff. And is this conversations that you're having with your clients? Let me pull up the chart here where I can see it, because I can't really see it on a tiny screen. Sorry, Bobby. Is this it? Sold above list price. So it's interesting if you're looking at this chart. So I'd be telling my clients, look, 2021, we saw a massive decline. So if we see a continued decline right here, we could follow along this 2022 line where we see even less homes selling over list price. But 5 months ago in 2022, right, in May, you were seeing almost 60% of homes selling over list price. In 2021, it was almost 55% that were over. So we're actually seeing a huge decline in the amount of homes selling over list price. So I would be telling my seller clients, like, look, hey, this is what we need to expect, and setting really good ground rules for my seller clients. Look, we need to be looking at incentives. We need to be looking at homes sitting on the market longer. Here's the things that we need to be looking at and preparing your clients, because nobody wants to have an expired or withdrawn listing because we did not give our clients enough upfront information. Okay, Bobby, let's talk about competition and list prices. We said that. All right, let's go to rent growth. So annual rent growth accelerated in October for the first time since a peak pandemic in February 2022. The typical U.S. rent is now $2,011, 3.2% higher than a year ago. National variation in rent growth smaller. More affordable markets in the Northwest and the Midwest saw a strongest annual rent growth in October, while rent has fallen from a year ago in Austin, San Francisco, and Portland. So this is where I think some of those sellers are going to be putting their homes on the market that we're worried about. Or let me back up. So some of those sellers, and especially in the Austin market, weren't getting the rent growth that they want because so much inventory. So now what we're seeing here is that they're listing for sale and for lease at the same time. Are you seeing a lot of for sale and for lease at the same time in your market? Jennifer says, our price remains steady and our inventory are increasing in Milwaukee. Interesting times. So this is something that I would be talking about with my clients, almost every day. I'd be putting out weekly videos to my database. This is the time to collect as many emails and put as many people on your database and create 2-minute videos on YouTube. You put them unlisted, you throw them in there. Hey, here's what's happening. Here's what we're telling our clients. Here's an experience I just had. Because guess what? Especially on YouTube, people don't really want to hear your sales pitch, right? But they want to hear success stories. They want to hear what happened in a transaction. So if you can say, hey, in a transaction, this happened, this is how we negotiated it. Here's how we got around it. Don't say the actual transaction, but you're going to have people perk up like, oh, I want that realtor to help me. That's especially on what I teach on YouTube. You definitely want to be as honest as possible on YouTube. People love that. All right, Bobby, let's look at the 10-year treasury before we get out of here. Man, I've wasted your time for 25 minutes. Hopefully I gave you value in that 25 minutes. But as we like to do and look at the interest rates happening, going on, the 10-year treasury, what are we at here? The 10-year treasury is up a little bit. So it looks like we might see rates tick up a little bit, but we did see rates come back down slightly yesterday to 7.4%. Are your clients as rate sensitive as some other clients? I'm curious. There we go. That's what I have for today. Bobby, give me back my full screen. There you go. All right. So if you have anybody looking in the Austin market, definitely reach out. We'd love to help you in the Austin market, but also make sure you get your BAMX subscription. I think there's so much value. I find so much value personally, and lots of deodorant. If you're following my my Instagram, I just put in my Instagram the behind the scenes, what happens shooting the hot sheet, and it gets sweaty in here. So, all right, I'm going to be in Dallas today. If you're in Dallas for the Conquer event, I will see you there, but have a great day.